Good day, everyone. This is the second part of adjusting entries, but before, let's have a quick recap of the concept of an adjusting entry. Okay, so this is the fourth step of the accounting cycle process. Okay, we have to record the adjusting entries for us to update the accounts and bring them to their correct balances. Okay, the accounts, of course, the financial elements, asset, liabilities, owner's equity, expenses, and revenues. So, in preparing the adjusting entries, of course, we have to apply the different accounting concepts, such as the accrual concept, wherein you will record the expenses the moment it is incurred. You will record the revenue the moment you render the service, regardless when was the money received or when will be received or when will be paid, okay? And the matching principle wherein the expenses should match with the revenue. If that revenue is rendered in a particular accounting period, you must match it with its related expenses during that particular accounting period. And speaking of accounting period, this is another accounting concept which we call the periodicity concept, wherein the economic life of the business is divided into an equal interval. So we all know that we anticipate that our business will continue to operate indefinitely, but we have to prepare our financial statements. In preparing financial statements, we have to consider what particular period would it cover, okay? And if the entity established already a range of time, okay, then that is what we refer accounting period. So how an accounting period works. So typically, multiple accounting periods currently available for the business. So they can choose either they would choose monthly or quarterly, semi-annually, or annually. Commonly, the businesses would do their financial reports annually, okay? But some company would do quarterly, semi-annually. If they will do a financial reporting less than a year, we refer that one as interim reporting. Okay, so let's have this example. An entity may be closing the financial record for the month of June. So, meaning when the statement was stated like this, the entity has a monthly reporting, meaning he will prepare his report every month. So, monthly interval, monthly iyang accounting period. Okay? So, the accounting period of the company covers June 1 until June 30. Okay, take note. Accounting period is very important. Why? Please do remember that our users, the decision makers, would use your financial information, your reports, in order for them to make a sound decision. And what should be presented to them is an accurate financial information in order to aid them in making business decisions. Okay? So make sure that the expenses and income that you would record or that would reflect on your financial statements is the correct amount of the income and expenses covered on the particular accounting period, meaning it should be the income and expenses on June 1 until June 30. If the It should not be the income and expenses before June 1 and income and expenses after June 30. Okay? So for example, there is a particular customer who pay cash of a particular service to be rendered on July 1. Okay, take note. July 1 mo render og service ang company ani nga customer based on their agreement. Now, yes, indeed, you receive cash on June 30, for example, but you will render the service on July 1. Would you still include that one as your income? Balik ta sa atong accounting period. Again, atong accounting period taman ra June 30. Kano sa nimo i-render ang service? On July 1. Therefore, that particular income should be included on July 1, not on the month of June, because our service is to be rendered on the month of July. Okay, bahalag 1 day lang na ang difference, but take note, July 1 na ka na mo render og service. Regardless, when will be the money received? Okay, that is the application of our accrual concept. Same with the expenses. Even though you did not pay, okay, for example, the rent expense for June, okay, you have an agreement with your landlord. For example, the business is renting a space, okay, for the business. So dapat, according to your landlord, you will pay every 15th day of the following month. Okay, for example, pagka July 15 pa ka, bayad, for example. But that July 15 is for the rent of the month of June. Take note, ang imong ibayad sa July 15, imong gibayad is ang rent for the month of June. So that particular rent expense should belong to the month of June. It belongs to the month of June, not on the month of July, because by essence, you pay that one because of the rent for the month of June. So you are paying on July 15, but you pay it because yun nga, it is for the June. So therefore, kato nga expense should be included in this accounting period, June 1 until June 3rd. Okay? So don't forget this one. This is a very important concept before we go on in the adjusting entries. Because we always make sure that whatever we record as income and expenses should be in this accounting period, meaning it belongs to this accounting period. Not to the next accounting period, not to our previous accounting period, but to our current accounting period. Okay? So we make sure that our income and expenses has the correct amount, the same with our asset and liabilities. Okay? We have to make sure that whatever we record should be the accurate amount and the correct amount. So another example. This one, an entity have a financial record for the year 2020. So it means yearly siya. Okay? So the accounting period covers January 1, 2020 until December 31, 2020. So our goal here is not to include the income and expenses from the previous accounting period, which is the year 2019, and income and expenses for the next accounting period, which is the year 2021, and to have accurate amounts for assets and liabilities. Actually, guys, if it belongs to the next accounting period, for example, expenses or income, okay? For example, you will render in income on June 2021 or January 2021 to make it much closer, or December 2020. Okay, so January 2021 pa ma-render ang service. Okay, wa siya nasulod sa tong accounting period. But then the customer already pay you. Okay? Kabayad na si customer. So, yes, dili siya part sa tong income, but take note that would be part of our liability, meaning you already have an obligation to render some service to the customer who already pays you. Okay? Take note, do wala kay ma-record nga income, but you should update your liability so that it will connote that you have an obligation to render service to the customer who already pays you. Okay, since you've already received the money. Okay, so that's why we have this nominal account and real account. Nominal account are those temporary accounts, or the temporary accounts are the expenses and the revenues ng mga account titles. We refer that one nominal account. While real account are the assets, liabilities, and owner's capital ng mga account title. Now, when we do our adjusting entries, make sure that one of this is a nominal account and the other one is a real account. This is one way of checking that you have made a quite correct adjusting entry. But if you will be having an adjusting entry wherein both your debit and credit are both nominal accounts, so maybe there's something wrong. Okay? So first tip, make sure that your adjusting entry has a nominal account. It could be debit or credit, and a real account. Same. It could be debit or credit. Meaning, na account title from the income statement, the income and expenses, and the real account na account title na asset or liability or owner's capital. Okay? Make sure this is a pair for your adjusting entry. One nominal account and one real account. Unsa to mga nominal account? The expenses and the revenue nga mga account titles. While real account are those assets, liabilities, and owner capital na mga account title. Okay? Because like for the our example kanina, if dili siya ma-part sa income sa year 2020, it will be part of the liability, right? So, therefore, that is liability is a real account and income is a nominal account. And they will form a one adjusting entry. Okay? Okay, let's have a recap for the types of adjusting entries. So first, we have accrued income. Next, accrued expenses. So generally, this type of adjusting entries is commonly called as the accruals. Okay? Next is deferred income, wherein the cash was received but there's no service rendered yet. Prepaid expenses, yes, the company already paid for the particular expense, but they did not incur it yet or they did not use it. Okay? So this one, we refer this one as deferrals. And the other type of adjusting entries, which we will be covering today, is depreciation and doubtful accounts. So this is referred as provisions. And unused supplies and inventory adjustment. So this one, when what is the type of business we're in, there is an inventory, but that is merchandising concern. But for now, we are focusing on service concern, so we will not tackle this one. The unused supply is the same with the prepaid expense, which was already discussed, the prepaid expense. You will just record if pila na lang supplies na bilin and update the amount. For example, imuhang supplies from 100,000 supplies after or at the end of the year, nahimo lang siya 30,000. So you update the amount of the supplies. You just record supplies expense, debit, and credit, and use supplies. Okay, same with the prepaid expense, actually. And the application of income and asset method, you will still apply that one. Okay, so let's go. Adjusting entry for depreciation expense. Again, guys, we need to depreciate the non-current asset or the PPE. Okay, except land. The property, plant, and equipment should be depreciated except land because land has an infinite use as of the time. Diba? Actually, magkadugay ang land, magka-appreciate ang value, meaning magkamahal siya. Unlike sa equipment, building, magkadugay siya, magka-lesser yung amount because um maybe dili na kay siya mugana, and there is already the wear and tear due to obsolete pud siya. So that is one of the factors that we will consider in depreciating. So we really need to depreciate our asset to reflect the current value of the particular assets that the company had. Okay, so we have this pro forma entry, depreciation expense as our debit, and accumulated depreciation expense. So there were a lot of methods on how to estimate that depreciation expense, diba? Though there is no actual cash disbursed, right? Wala man jud ta nagpagawas og kwarta, but we should still um record this expense. Okay? Because we use the particular PPE, okay, ang term nga use, meaning natay gamit, and we refer that particular depreciation expense, that particular usage, okay, of the equipment or the vehicle, we refer that one as our depreciation expense. So as I've mentioned earlier, there were different ways on how to estimate the depreciation expense. But we'll be discussing the most common and the simplest method of depreciating an asset. Okay, so the formula for estimating the depreciation expense, of course, this is what we refer as the straight line method. So the formula for that is acquisition cost minus residual value divided by estimated useful life. So when we say acquisition cost, this is the historical cost or the amount you disburse in order for you to acquire a particular fixed asset. Or simply, pilay palit nimo ana nga fixed asset or PPE. Minus residual value. So residual value or scrap value, meaning at the end of its life, can you still sell that one, maybe sa junk shop na guro, no? And have somewhat a return, di ba? Bahalag na siya sa end sa iyang useful life. And i-divide na to na siya sa estimated useful life. Of course, useful life is the amount of time that the fixed asset can be used or how long that particular fixed asset para mo last siya. Okay? So, it could be in months or years. Okay, just take note of these three information. Acquisition cost, residual value, then divide sa useful life. Okay? So, take note, if you will use a useful life in years, meaning in years imong gigamit, then you will get annual depreciation, meaning that is the depreciation for a year. But if you will use estimated useful life in months, what you will get is monthly depreciation. Okay? Please take note for that because once you will do your adjusting, of course, you will see to it that the period it covers, pila ka months or year na ba? Okay? So, once you computed the depreciation, you must consider unsa imong gi-compute, annual ba to or monthly. You will know that if ang inyong gi-divide is divided by 5 years, so annual. But if you divide it by 60 months, so what you've computed is monthly depreciation. Okay, take note for that. Okay, let's have an example. The delivery van acquired for 40,000 pesos has an estimated residual value of 10,000 pesos. Okay, and at the acquisition cost of 40,000 and the residual value is 10,000 pesos. Okay, so you just substitute the amount 40,000 minus 10,000. Okay, and the useful life is 5 years. Okay, i-divide na to og 5 years. Take note, years na tong i-divide. So what we will get is annual, meaning that is the depreciation for the whole year. Okay, the depreciation expense then would be computed as, okay, we will just apply the formula 40,000 minus 10,000 divided by 5 years. So our answer, depreciation or the annual depreciation is 6,000 per year. Okay? So that is how you compute the depreciation. Okay. Now let's apply the formula to our problem wherein nanatay specific na accounting period. Okay. So the bond was acquired on January 1. Same given. And the accounting period ends on December 31, meaning it has the whole year depreciation from January 1 to December 31. Nagamit siya for the whole year. That's why what we will be using as our amount is the 6,000 whole amount, meaning the annual depreciation na 6,000. Okay, we follow our pro forma entry, depreciation expense, and pwede na to specify kung kinsa ni nga depreciation expense or unsa nga fixed asset. Key depreciation expense, delivery van, 6,000, and we credit accumulated depreciation expense, delivery van, 6,000. So that's it. No problem with this particular problem. Okay, or this particular case, because you use your van for the whole year. Now, what if you acquired your van on April 1? Okay, we have the same figures. Okay, what we've computed is the same, 6,000 per year. ang atong annual depreciation. But take note, dili na to whole year nagamit ang delivery van because napalit ra nato siya sa April pa. Okay, we count April to December 31. Pila ka months ang na-cover or pila ka months ra nato nagamit ang van taman sa end of our accounting period. Okay, again, the ending of or the our accounting period ends on December 31. So April to December 31, that is 9 months. April, May, June, July, August, September, October, November, December. Okay, we cover 9 months. Ginagamit na to ang delivery van for 9 months. Therefore, atong depreciation expense would not be the whole 6,000 because the 6,000 covers the whole year. But 9 months raman, so we have to proportion it. Okay? So, we know that 6,000 pesos ang usa ka tuig. If we divide it with 12 months, because there are 12 months in a year, so we have 500 pesos per month. So our depreciation expense per month is 500 pesos, or simply our monthly depreciation is 500 pesos. Take note, 9 months ang na-cover sa to ang fixed asset. So 9 times 500, our depreciation expense is 4,500. Okay, so meaning our provision, we provide a depreciation expense for the end of the year. Depreciation expense 4,500 and credit accumulated depreciation expense 4,500. Okay, so for the pro forma of our journal entry will always be like this: debit expense, and you credit a contra asset, which we refer accumulated depreciation expense, and then as to the amount, of course, you have to apply the formula in of the straight line method. Okay, and make sure that you correctly count how many months does the company use that particular asset. Okay, so those are the key points here in adjusting the depreciation expense. Okay, so another example. The delivery van acquired for 40,000, but this time on June 30, meaning, okay, June 30 siya gi-acquire, ang residual value 10,000 and has a useful life of 5 years. Okay, so our annual depreciation is still 6,000 pesos, but that is for a year. Now take note, June 30 nato siya na acquire. So we will count, we will no longer count the June 30, but we will start our counting on July. July, August, September, October, November, and December, meaning 6 months. Okay, 6,000 times 6 over 12. Okay, so that's why we have the amount of 3,000 pesos. Take note, ganiha, when we count April to December, it becomes 9 months because we include the April. Diba? April, May, June, July, August, September, October, November, December. But this one, we did not include the June because it is already on the 30th day, which is very close at the end of the June. That's why nag-start na tag-count sa July. Unlike sa April, April 1, so it is the starting date for the April. So we would still count April as part of the usage of that particular fixed asset. Okay, please take note and be careful for that on counting how many months have you covered or the entity covered, di ba? So, tip lang, if it is closer to 1, then i-appeal na to na naman. But if it is closer to 30 or 31, then dili na nato na i-appeal og count kana nga okay? So for example, June 30 or June 29 or June 28. So kana siya, dili na nato i-appeal ang month of June. Diretso na ta sa July and so on. And for April, for example, instead of April 1, it was on April 3, April 5. So it is still closer to 1. So therefore, we should still include the month of April. Okay? Next. Now let's have the bad debt. Okay. Bad debt expense. I know this is not new to you. It was already introduced on our previous discussions. Okay. This time, you should provide a provision, okay, for the bad debts, okay? Because why we should provide? The business sometimes would allow their customers to do their transactions on credit, meaning magpautang ang entity. When that happens, of course, you will record accounts receivable, and the entity would record accounts receivable, and then now the entity would try to gather data if which of the accounts receivable, meaning kinsa sa iyang mga customers, ang possibility nga dili nakabayad. It could be na bankrupt iyang customer or kalitrag kamatay iyang customer. Of course, if mamatay na siya, he or she cannot pass his debt to his descendant, okay? So, matay po ang utang, tree, together with the death. Okay, the debt together with the death. Anyways, so that is inevitable circumstances to the entity. That's why it is advisable and reasonable for them to allocate a particular expense to their accounts receivable. So meaning, they will adjust their accounts receivable and see to it how much of their account receivable or the entity's account receivable is realizable. Meaning, this amount can be realized. Meaning, madawat na ko ni. Ana siya. So, again, there is no disbursement of money or walay liability ang entity to pay money for this, but it is an assumption of the entity that whatever amount that they cannot collect from their accounts receivable is part of their losses, lugi nila. And we consider and call that one as bad debts expense. So this is our pro forma entry. We debit an expense account that we call bad debts expense, but bad debts expense may also have another account title. Pwede siya uncollectible account or doubtful accounts. So any of these three, okay, any of these three account titles are allowed, okay? So, and these are expenses, okay? Mga expenses ni nga account title. And our credit is allowance for bad debts. Or pwede put allowance for uncollectible accounts. Pwede put allowance for doubtful accounts or estimated uncollectible accounts. So if you encounter this account titles, don't be confused. They have the same purpose. with the allowance for bad debt. When you see an account title with allowance, that is not an expense account but a contra asset account. Okay? So, basta kay masumpayan na nag-allowance for si uncollectible account, si doubtful account, so that is no longer an expense account, but instead a contra asset account. So, it is still an asset account, it's just that it has a reverse nature. I mean deduction siya sa asset. Okay? So, just keep this in mind that you can also use these particular account titles when you will be having the bad debts expense. So for example, if you will use bad debts expense, you will use a credit allowance for bad debts. If you will use uncollectible accounts as your expense account, you will use allowance for uncollectible accounts. Okay, let's have a uniform pair here. Okay, if you will use doubtful accounts as your debit, so you use allowance for doubtful accounts. So for you to easily remember, whatever your expense account, punan ra nimong term nga allowance for, then that should be your credit nga account title. Like for example, if you use uncollectible accounts as your debit, then your credit, punan nimong allowance for, then sumpayan nimong uncollectible account. So that is already your credit na account title. Anyway, usually, account titles were provided in the chart of accounts. Dito na mo mangita sa appropriate na account title. But if like kuan gihatag nga chart of accounts, again chart of accounts are wherein you will find the list of all account titles of an entity. Okay? So take note of this again. This is expense account, meaning nominal ni siya, while allowance for bad debts is a contra asset, meaning this is a real account. Apply gyapon to atong general rule that there should be one nominal and one real account. Okay? So that is our pro forma entry. Now, how should we estimate bad debts? Generally, there are three common methods. First is the aging method. Okay? Aging method, based sa iyang name, you will estimate the bad debts, pilay amount sa bad debt based sa age sa tong accounts receivable. So when the company do an analysis of its accounts receivable and see to it pila naman ni ka months siya wala ka bayad. Okay? So iyan ang tagsa-tagsaon, then na siya ay grupo na niya, particularly what particular age group, then i-analyze nila pila ang appropriate rate ani nga dili na siya matingi. Okay? So for example, the company has an account receivable age 1 month and below. So wa siya natingil for 1 month and below. So this is the bracket here, which worth 100,000 pesos and has 1% rate of uncollectibility. Another age group for the accounts receivable is 2 months and more, which worth 500,000 pesos and has a 10% rate and collectibility. So when you estimate, okay, you compute this one. So how should we compute this one? The amount of accounts receivable of a particular age group, then multiplied to the percent rate of uncollectibility. Again, ang percent sa iyang uncollectibility, meaning pila ka percent siya nga dili siya makolek. Okay? Sometimes the given would give you the percent of collectibility. Take note, that would be a tricky part when you're computing um provision for bad debts, okay? So, pag ang gihatag, percent for collectibility, minus 100% lang na inyo guys. So, for example, ang gihatag is percent of 99% of collectibility. So, 99% makollect, so ang the remaining 1% is the uncollectibility. So, katong 1% mo to tong i-multiply sa balance for that particular age group. Or makuha na to itong estimate. Okay? So, same with the 2 months, 500,000 worth, there na siya 10% rate and collectibility. Meaning, kini nga age group of accounts receivable, 10% ani may not be collected anymore. So, how should we compute this one? That is just our provision for bad debts, 100,000 times 1% plus from the 2 months, 500,000 times 10%. Okay? So based on given, there were only two groups, age group, okay? The 100,000 and the 500,000. So once you add the product of every age group, then we get 51,000 pesos. Okay? Now, this is already the amount that we will record here. So bad debt expense 51,000, allowance for bad debt 51,000. Okay? That's it. That's how you record the provision for bad debt expense. Okay? Another method is the percentage of accounts receivable. So this is much easier. The company would analyze and have its analysis and estimate what is the appropriate rate of uncollectibility sa accounts receivable, then i-multiply na lang nimo diretso. Okay? So, for example, the company estimates that 5% of accounts receivable amount is uncollectible. Again, make sure 9% yan yung email times is the uncollectible. So, if ang company na ay balance sa yung AR 1 million and 5% is uncollectible, so 5% of 1 million is 50,000. So this is already the provision for bad debt. So you record bad debt expense 50,000 and credit allowance for bad debt 50,000. And that's it. So it is much easier kung maghatag ng percentage of accounts receivable kay you will just multiply the percent to the balance of the accounts receivable. Unlike the aging method, there were a lot of receivables na sila age group and sometimes there were also problem wherein kamoy mag-grupo sa iyang mga accounts receivable, which is quite long ang process. Of course, sa itong example which has only two age group of accounts receivable, this is not the common or in reality, di siya duwa itong age group. There were a lot. Uban, about pag 3 months, 4 months, and so on. Okay? So, that's why it is simpler if the company would apply this particular method, getting second method. And the third method is the percentage of sales. Same with accounts receivable, it's just that the basis for the third method is the sales amount. Okay? So, the company, for example, yung sale is 5 million and the uncollectibility rate is 2%. So you will just multiply 2% to the amount of sales, 5 million. So our provision is 100,000. So if we adjust this one, our budget expense, 100,000 and credit allowance for budget expense, 100,000. Okay? So please take note of the method of how to compute the provision for bad debts because sometimes the company won't give or the problem won't give it right away sometimes, But if the case is very generous, yara pong idaritso og hatag pila ang provision. For example, like this, estimates that 100 pesos of its credit revenue will not be collected. So if nga niya ang pag-estate, so there's no need, okay, for you to compute. It is explicitly stated here. So diretso na lang, we just follow the performa entry expense, debit, and credit the contra asset. So budget expense 100 and credit allowance for bad debts, okay? So we compute the net realizable value. If the problem is asking the net realizable value, that is just the amount of accounts receivable minus the allowance for bad debts. As I've mentioned before, allowance for bad debts is a contra asset, meaning a deduction of a particular asset, specifically accounts receivable. That is to adjust our accounts receivable to the uncollectible portion of it, di ba? So, uncollectible naman siya, so makuhaan siya. We use allowance for bad debts as the account title to be deducted to our accounts receivable. So, our net realizable value for the accounts receivable is, this is the formula, the balance of accounts receivable minus the allowance for bad debts. So, if the company's accounts receivable na amount na 3,400 and ang allowance for bad debt is 100, so our NRV or net realizable value is 3,400 minus 100. So NRV is equal to 3,300 pesos. So just remember this one. But if there are problems asking you how much is the NRV, so after computing the allowance for bad debts, you deduct that one to the accounts receivable amount, then you will get the net realizable value. Okay? Okay. So far we've covered journal entries, posting to ledger accounts, preparing an adjusted trial balance, unadjusted because there's no adjusting entry yet. And at the end of the period, you record your adjusting entries to update the correct amount of our financial elements, diba? So, next is the adjusted trial balance, okay? So, we are now in this step. So, just like in the trial balance preparation, sa an adjusted trial balance preparation, same process. But this time, you update the amount that was adjusted. So, this is from our previous lesson na an adjusted trial balance. So, if you have already this an adjusted trial balance, it is very easy now to prepare your adjusted trial balance. Okay, let's have this presumed adjustments, okay? Meaning natay mga adjusting entries. So here, this is our adjusting entries. Now, whatever amount of a particular account title, dapat mo reflect siya sa balance sa tuang adjusted trial balance, okay? For example, okay, let's have an example here. I-adjust niya ang receivable, 300 pesos, meaning i-debit niya ang accounts receivable. So, sa unadjusted trial balance na ay balance si AR, 3,400. Then, pag-adjust niya is napunan siya og debit, 300. Okay? So, debit plus debit. So, 34 plus 300. Therefore, the new amount of our accounts receivable is 3,700. Okay? So, dapat ang makita sa itong adjusted trial balance here. So, our new amount for accounts receivable is 3,700. Okay? Take note, we just follow what is in the unadjusted trial balance and reflect the changes nga nahitabo sa tuang adjusting entries. Again, this is presumed adjustment. Okay? So we will just check the updating of the balances from unadjusted trial balance to adjusted trial balance. Okay, next adjustment. Okay, let's continue. Service revenue may credit og 300. Okay, let's refer service revenue from the unadjusted. Na siya amount na credit balance 9,550. And based yung adjusting entry, credit po siya. So, credit and credit. So, i-add lang niya amount. So, this is 9,550 plus 300. That is 9,850. So, let's check. Okay. Sa itong adjusted trial balance or revenue already amounting to 9,850. So, updated na. Next is the utilities expense. Okay, we have utilities expense here, 1,800, but our unadjusted trial balance doesn't have utilities expense. So therefore, this is an additional account title to our adjusted trial balance. So look at here, nanatay new account title, 1,800 because of our adjustment. Okay? Diri, tama na siya taxes and licenses. Sa tong adjustment, there are additional and accounting titles, kinalta utilities expense or service supplies expense, and depreciation expense. Okay? So, we just reflect whatever adjusting entry that we made sa atoang adjusted trial balance. So, when we say adjusted, it means na-reflect na ang atoang adjusting entries. Step preparation, we just follow how we prepare the unadjusted trial balance plus the modification of the adjusting entries. Okay? Okay, so where are we now? So far, we are done with journal entries. Next, posting to ledger accounts, preparing an adjusted trial balance, having adjusting entries at the end of the period, accounting period, and have the adjusted trial balance after preparing the adjusting entries. Okay, so the remaining accounting process will be discussed in our next quarter. So prepare and study for your midterm exam. Okay? God bless everyone and goodbye.
Something in your eyes, tell me who I am. Something in my heart